What's up, everybody? Welcome to another episode of KJD Investor. It's yours truly, KJ. And without further ado, let's hop into the portfolio. Right now, we're looking at the investment account. Right now, the markets are up and running. This thing is going crazy. I'm sitting at $57,140.94. We're up $26.98 or 0.05% in the last hour. Buying power right now is $671.76. As we scroll down, we see interest occurred this month so far. It's 22 cent. You know, we got that gold status here. So we got that 4.5 APY with gold right here on this Robinhood. Lifetime interest paid $58.09. Cash earning interest $671.76. So it does match what's in the buying power. Right now in crypto, I got 101 USDC coin. 101, that's just $1 a coin. Not really going to do too much with that. It just sits there, kind of holds a place. I just want to be exposed to some crypto, so that's my way of doing it. I got a smidget of AVAT because it was free. I had some Ethereum, and I sold it at a profit if you've been watching for a while. Next up, we got stocks and ETFs. And right now, today, guys, I want to talk to you about some stocks and ETFs that's actually bringing in some very, very good returns. One of the first ones I want to look at this morning is Walmart. Walmart is at $84.05. This morning is up 0.24% in the pre-market. I have 106.89 shares, almost 107 shares of Walmart, and I'm continually buying more. I'm DCA, dollar cost average. So if it seems like it's a slow process, well, that's why, because I'm actually building this stock position dollar by dollar. Market value is $8,984.51. Average cost is $56.65. I have a total return in this position of $2,928.96 or a 48.37% return. Guys, that's almost 50% return on this investment. Oh my goodness. Walmart year to date, guys, if I look at the year to date, it is up 60.35%. It is up 60.35%, $31.63 is the dollar amount. So I'm at a 48.37% return. I dollar cost average into this position every 2 weeks. It's some stocks I do every week, and then there's some stocks I do every 2 weeks. Sometimes I do Walmart once a week, but for the most part, I at least do it once every 2 weeks is my strategy for this particular stock to get into it. Now, the next investment I want to share with you guys that I kind of hit aggressively and heavily is my SPLG. It's my SPDR portfolio, S&P 500. Right now, it's trading at an all-time high of $70.08. I've been buying this stock since it was like in its 50s per share, all the way through the 60s per share. Now we entered our 70s per share. I have 176.55 shares of SPLG. The market value is $12,372.72. Average cost is $62.53. 31 cents. I'm sorry. Total return right now, guys, is $1,371.92 or an increase of 12.47%. Anything over 8%, guys, we're getting rich. And this is no different. This is our main focus. Well, this has been my main focus for year 2024. Leading up into year 2025. We are in November. I've been investing in this stock all year since February. And we're just really trying to build up that foundational ETL, because once you have a solid foundation, just like a building or a home or a house or whatever it is, a solid foundation sets the tone for the rest of the event that's going to take place, the rest of my investments. The foundation for a good building, it sets the foundation for the rest of the height of the house or the building, things like that. So SPLG for me is that foundation because it's the S&P 500. It's the standard. A lot of people like to compare their portfolios to what the market is doing and what the market standard is. And these are the type of returns that the market usually brings, usually between 7 to 10% return on the year. If we look at the year to date, for SPLG. SPLG is actually up. The S&P 500 is actually up 26.20% on the year, or $14.55.55. So yeah, it's been doing great, man. S&P 500, 26% return on investment. So I'm going to continue to hold it, and I'm going to continue long term because I believe in the market, and I'm going to continue to add more to that position. Next ETF I want to talk about is my FTEC, the Fidelity Information Technology Index ETF, right now at an all-time high of $189.02. This thing is up in the pre-market 1.2%, $3.01. This is the fast growth ETF. I only have 5.33 shares, and the reason for that is because, like I told you guys, I want to invest kind of aggressively in my positions. I'm still building up that SPLG, but once 2025 comes in January, I will be shifting my focus from that foundational to now high growth. FTEC market value $1,008.69, average cost $156.09. Total return so far, it's $175.73. I'm up 21.10% on the position. I wish I had more invested in this ETF, but guess what? I got one job, and I use my paychecks as I can. I got a house to pay for. I got a family to take care of. And so what I do, I live below my means, and whatever I'm able to invest, I aggressively use it to invest in different things. But if I wanted to see the numbers grow fast like I did for SPLG, I had to put most of my investments into my SPLG. Now, I'm not saying that's what you have to do, but that's just what I chose to do because I want to see growth and I want to see it quicker. Okay, when I click on the year to date, LTEC has a return of 33.53%. Oh my goodness. And now, guys, with a portfolio over the six-figure mark, I've learned that I have to have a combination of at least an investments of at least over 27%. And if I can do that for 10 years with six figures in my account, I can have $1 million. I can become a millionaire within 10 years of my investment. So guys, I'm trying my best to just stay the course, and I am going to stay the course. I'm trying my best to encourage you guys to find a plan that works for you, because it's not about me. Your investments is not about me. What I do is going to only benefit my portfolio, but it's up to me to help give out. I'm trying to give you guys value, information, more knowledge, wisdom, understanding on these stocks and stock market, what companies to invest in, things like that. And I can't tell you what to invest in, but I'm just, like I said, I'm just trying to give you information. I'm not telling you what to do. I'm just giving you information. I'm not giving advice. I'm just giving information. Okay. I wanted to make that clear. But yeah, that's year to date, 33.53% increase. And I know for me, if I can invest my money in as a collective whole in my portfolio to get over a 27% return yearly in the next 10 years, I would definitely not be on a job. I would definitely be millionaire status. Even before that 10 years, though, even before the 10 years, I believe my portfolio will be able to free me from working at any 9 to 5. Even now, I'm close to that point because I keep my bills really low. Guys, it's not all about how much you make, but it's how much you keep. And then when you keep it, how much can you multiply? That's what it's all about when you got these investments going. Now, the next ETF I want to take a look at is DGRO. DGRO is the iShares Core Dividend Growth ETF, going at $63.90 right now. The pre-market is up 0.20%. I have 73.95 shares of DGRO. Market value is $4,725.86. Average cost $56.75. So a bit of a slower grower, but that's okay because this ETF is a hybrid between growth and a high dividend. So that's always a good thing. Total return $528.59, or a positive 12.59% increase. Year to date, we're looking at a 19.33% year to date. Not quite 20%, but it's okay. It's over 8%. And anything over 8%, guys, we're getting rich. We're going to get there eventually. Like I said, this one is a growth / dividend paying ETF. So it's not all growth, but it's not all dividend. It's a combination of the best of two worlds. Like FTEC will be my growth, and then I got SCHD as well. That's a high dividend, but DGRO is like a big combination between those two, and you have growth and you have dividend paying assets. Next up, I just mentioned it, SCHD, the Schwab US Dividend Equity ETF, sitting at $29 even. I'm up 0.31% in the pre-market. I have 218 shares of SCHD, and this is after the post split. I got market value of $6,326.99. Average cost is $26.10. Total return right now is $633, or a whopping 11.12% increase. And that's not bad for a dividend focused ETF. Right now, we're up 14.68% on this ETF on the year. Like I said, not bad for a dividend-focused ETF. This ETF is not growth. This ETF is dividend-based, but it still has companies in the U.S. market that actually grow. Even though it's a dividend-based ETF, this thing grows sometimes as if it's a growth-focused ETF. So it's still a good base to have in the portfolio game, because when the markets are volatile and the highs hit really high and the lows hit really low, SCHD will be there in the middle to kind of pull your portfolio up if the portfolio dips too low, and it'll help kind of keep your steady level if everything going up above the level. So SCHD serves that purpose for me, and I really appreciate it. The next stock I want to talk about, even though it's red right now, is NVDA. NVDA is at $148.52. Right now we're down to 0.24% in the pre-market. Not bad. I got 54.7 shares right here of NVDA. Market value $8,125.83. Average cost is $118.26. Total return is $1,656.81. I'm up a whopping $25.60%. Over 25%. That's what I'm trying to say. So that's NVIDIA. I'm now taking a look at the traditional IRA, $44,679.40, down temporarily right now, $35, 0.08%. Guess what? That's not nothing. That's going to bounce right back up. Buying power, $17,462.80. So many people ask me, how did I get the buying power like that? Because I work a lot and I save my money. I live below my means. I have patience in the market. I consistently put money into the market every single week, or every time I get a paycheck. When I was working a job at Walmart, I was getting paid once every 2 weeks. I would consistently put in the market even then. And my company's 401k, I would make sure I get that match and go over and beyond that match. Now that I'm at a new job, I got another 401k, plus I started my own Roth IRA. So I keep contributing to both of those, and the company I'm at now has a pension plan, so that also helps in the investment world. Now, right here, I'll show you this position in the video, $148.48. Same pre-market of 0.27% down, but I have 150 shares over in the traditional IRA, which come out to $22,274.98 in the market value. Average cost in this particular portfolio is $109.98. I might be down today $58, but overall total, I'm up $5,777.66, or a whopping 35.01%. If you look at the year to date for NVIDIA is up 201.50% all year long, and my money right now is in there at the 35% increase, guys. That's that's almost $6,000 worth of profit gain just in this one position, in this one portfolio right now. Y'all, NVIDIA is not playing. Like I said, if I can once you get your portfolio to $100,000 and you can get your investments in something that gives you at least a 27% return, like NVIDIA is giving year to date over 200% return, guys, I'm telling you, it don't even take the full 10 years. You will be millionaire status. Now, so right here, I'm at $101,748.90. in the Robinhood account. So you guys have seen it. There you go. Also, I got another $6,000 in the Fidelity account. Like I said, I got another 401k and a Roth IRA that's over in the Fidelity account. So you guys are sitting on, we're closing in on our first 110,000 all together. Plus, I got savings at home and stuff like that I don't count with these type of things. So I got extra money on the side, until ready to be deployed in the market, things like that. But yep, that's where we are with things. That's where we're at. I hope you guys found this video helpful, informative. If you haven't subscribed, do me a favor, consider subscribing. Like, comment, subscribe, share the video, pass it on to a friend that needs a friend, and pass it on to them too. Make some comments down there below. I can answer anybody's question that you may have. Until next time, this is KJD Investor signing off. Peace.